Good evening. This is Tom Alexander. This is a special stock market update for Monday, September 22nd. In light of today's price action following Friday's ramp up, hopefully you watched the weekend report. And quite candidly, I came into today not expecting this. Today was a really interesting day. There are some oddities that merit attention. I am not one of these people that I try very hard not to be persistently bearish or persistently bullish, calling for the end of the world, declines. We are in a bull market. We're in a bull market. All the indices are participating. However, there are cracks in the dam here. We are way overdue for some sort of short-term retracement. There were so many signs today that are increasing that point to the idea of at least managing your risk if you're a swing trader from the short side. If you're a day trader, maybe taking a hard look at the short side during the intraday trade. Now, today was about as vertical a day as you're ever going to see from a day trade perspective. I do day trade, I swing trade as well. Today caught me by surprise. It happens. I always preach never trade a narrative. I came in today with a narrative that the market was going to go down. And I tried one trade and got run over. And I said, okay, you're out of sync. I stopped. Anyway, so let's take a look at the indices and some things that I think are pointing to a potential, at least some things that would point to caution. Okay. So let's take a look here. Let me pull up the charts. Where are we? Here we go. All right, we'll start with the SPX. Now, I posted this chart in the weekend report, which, if you are unaware, you can access. You can go to alexandertrading.com, click on weekend updates, and click on the date for this weekend. It's free. Okay. All right. So this is basically the chart I posted in there. I've updated it because we had another update today. And we are up now. The SPX is up over 38.5% off the April low. It is about as vertical a move as you're ever going to see. Now, I started sort of keeping up with the magnitude of the legs up prior to these very short-term corrections that we've had, retracements that we've had. And I started keeping up with that at the end of May. So we had a one of 5.09%, 5.67, 3.62, 4.23. You get it, right? All right, this last one, the one we're in now, is approaching the greatest in magnitude that we've seen off the May low, which is about 5.67%. 5.67% would put us up here at 67.25. That's less than 0.5% from today's close. So we'll see. There's nothing magical about this. This is sort of a rough, measured move type of concept. It's as accurate as any formulation of magic numbers that you choose to use. It's a guess. It's just showing the relative move that we've had relative to the moves that we've had since the end of May. Now, the extraordinary thing about this move off the April low has been the shallowness and the incredible short duration of the retracements. So let's just take a look at that. It's okay. Let's go over here. And from this May 19th top into this May 23rd low, 3.4%, 2%. This was a maybe 8-hour decline, 1.6%, 3%, 2%, 2%, et cetera. So the retracements have just been so short-lived and so shallow. Now, this market may trade higher into the end of the year. I think it's extremely improbable that it continues higher at the rate of change that we've seen since the end of April. Again, we're up 38.5%. Now, let's take a look at the NDX. Under the assumption I can find the NDX. So we'll just do this. Well, okay, so here's the NDX, and I've basically did the same game with the NDX. Obviously, the NDX tends to have a little more juice in it. It tends to move a little bit more up and down, as does the SPX. And the greatest magnitude of the swings up is about 9.2%. 9.2% would put it at 25,065, which from current levels is about 1.2% higher. We're up almost 50% off the April low in the NDX. It's just, again, it's extraordinary. Now, you may say, well, that doesn't tell me anything. What are the signs that there might be a crack in the dam here? Okay, let's look at that. This is where I think it gets interesting and as a heads up. All right, this is the equal weight S&P. Now, the equal weight S&P never closed its gap today. Now, it did close on its high. I mean, it had a strong rally, but it never closed its gap today. Let's look at the New York Composite. Now, this is the New York Composite did close at an all-time high, didn't make a new all-time print high. Now, I want you to make note. Remember this because this is going to come into play in just a minute with something else I'm going to show you. In New York Composite, which is the broadest base of the indices that I'm going to show you, it's all the stocks listed on the New York Stock Exchange. It was up, strong up day to day, closed close to its high. And then we have the Russell. It also is a very broad base index. It closed close to its high. Let's see, did it make a new all-time closing high? Not quite, but close. And then we have, what else? Is there another index in here I'm looking at? That's it. Now, this is where it really gets interesting, and this is where I want to tie all this together. Let's go over here and look at the internals of this thing. Now, first of all, VIX. And I posted this again in this weekend's update, and this has gotten even more extreme. VIX spiked today with all the indices making new highs for this move, for this rally. And it's been higher now 4 or 5 days above from where this rally started back in early September. That's very unusual. So that's unusual. And then I want to show you this. This was mind-boggling. This is breadth, NYSE breadth, advancing minus declining issues. All the indices were up today. Breadth closed basically unchanged. I'm showing it closed up 1. Now, I don't, it depends on your data feed. Maybe it was up 10, maybe it was down 10, but it was basically flat on the day. Now, you may say, well, of course it was, Tom, because the market's being driven by 10 stocks. Yeah, the market's being driven by 10 stocks, but this doesn't explain why the New York Composite, the Russell, all the indices were up and breadth was this narrow. So something has to give here. Maybe we're going to have another ramp and this is going to correct itself to the upside. And we have another broad-based rally, breadth expands, and it's a reset, and we just continue higher, higher, higher. I really believe we're close to a short-term correction time-wise. Price-wise, if we're in some phase of a short-term blow-off, so we'll see how it plays out. If you found value in this, please like, please subscribe, please leave comments. I appreciate it. Have a great evening. I'll talk with you again soon.